more about gold? Well, yes, because gold at the moment is growing increasingly important. Remember, gold is not an investment. Gold is a safety net. It's where you go to when all of your paper investments, all of your paper money crumble to dust and become worthless. And it's looking more and more like that is the situation that we're looking at. So, it looks like the first cracks are appearing in the precious metals system. Demand for real physical gold and real physical silver is outstripping the supply. And this causes some obvious things and some not so obvious things. One of them is gold backwardation. Now, that is a strange technical term for what happens when the price of real physical gold is actually higher than the commodities market tells you that it should be. And this is the case at the moment. There are people who buy large quantities of gold saying publicly that gold is trading for between 2 and 2.2 times its stock market value. So you're looking at $2,500 $2,500 an ounce even. So this may affect you if you buy a lot of gold, or it might affect you a tiny bit if you don't buy a lot of gold. Because if you buy coins, gold backwardation is happening to you as well, but it's kind of hidden. Because people have always paid a premium to have their gold in coins, because it's made into a coin. It's not just a big solid bar that you cast and that's it. This is a coin that has to be made from metal that's rolled flat, stamped out in a mint, inspected, all those good things. And that costs money. And traditionally we've paid between 5 and 7% over the top for that on silver. Gold, it's been more like 2 to 3%. Well, the other day I went to buy a couple of gold coins, and guess what? We're now up to around about 10% premium. If you take the weight of your gold coin and multiply the value stated on our wonderful stock exchange by the weight, and then you take that away from what the coin's costing you, you're looking at quite a substantial increase. So there's no doubt that gold backwardation is occurring. It's hitting those people that buy tons of gold far harder than it is the people that buy the occasional few coins, such as myself. What can we do about this? The answer is nothing. It's a sign that the price of gold has to go up, and has to go up considerably. Now there's another part to this little presentation, and that is, where do you keep your gold? If it's real physical gold and you keep it yourself, good on you. But if you pay someone else to keep it, or you've got it with a relative who happens to have a safe that you don't know the combination to, then maybe it's not so good. Now, why do I say that? Well, there's a little bullion bank in Austin that went bust a little while ago. When I say little, they had 4 tons of gold, just over 4 tons of gold on deposit for people, and a couple of their larger depositors wanted their gold back, and not unreasonable request, you might think. They were probably fed up with paying storage fees, which I'll come to in a minute. Well, guess what? The bank didn't have any gold. It had none. And why was this? Well, a little while ago, when the price of gold started dropping precipitously, they thought, we can make a killing here. And they sold all of their customers' gold, thinking that they could buy it back when the price dropped even further. But guess what? They were pretty near the bottom of the market when they sold it, and much to their horror, the price started to climb. Very old story of greed and mismanagement of customers' resources. And it just goes to show it goes on in bullion banks as well as everywhere else. And to rub that in, you had the JPMorgan Salga. This is over a year ago now, where JPMorgan was selling effectively silver bonds, so that these pieces of paper that they sold you would be backed up by silver, and the text of the contract made it pretty obvious that they were going to be held. This silver was real physical metal. It was going to be held in a vault, and you had to pay storage charges. Every year you had to pay a storage charge, or every month, or whatever it was. Guess what? There was never any silver. The storage charge was just a way of getting you to pay them a little bit more. And somebody found out about this because they asked for delivery of the physical silver, and guess what? No physical silver was forthcoming. Now, if a big company like JPMorgan can do those sort of things, the little guy down the road, he's going to do them, but unlike JPMorgan, he's not going to have enough money to buy off all the people he's swindled and avoid being shut down, which is what JPMorgan did. So be careful about where you keep your gold, whatever you do, and where you keep your silver. If you are one of these people who is lucky enough to have a large amount of money and you have it professionally invested for you, it's time to contact your broker. Why is this? Nearly all of these wealth management people say, oh, you should have around 10 to 20% of your net worth in gold or precious metals, just in case something bad happens to the stock market. Guess what? Do they go out and buy physical metal? Do they? Hell! You're actually an investor in GLD or one of the other paper golds, and maybe one of the paper silver funds. There is no physical metal involved. Which brings me on to GLD. You might think you can ask for your gold, especially if you've got an older certificate, which were written with somewhat better terms than the newer ones are. The answer is I wouldn't try it, because Comex have just announced what their actual available gold levels are. 142 tonnes. That sounds really good, doesn't it? Everyone's smiling, everyone's happy. They've got 142 tonnes. No. This 142 tonnes is 1/400th or thereabouts of the contracts that they've actually written. So, if everyone asks for their gold back, what happens? Well, if 0.5% of people ask for their gold back, they've got real big problems. They're keeping roughly 0.25% of gold actually in their vaults. As if it's there, of course. You never know in this world. Germany can't get its gold back. The Swiss can't get the gold back. Denmark can't get the gold back. It seems that the only people who can get gold is us, the people who buy small and buy coins and of course pay a premium, which really, really sucks. Well, I hope you found this useful and you found it informative, and if you have, please like, share, subscribe, send me any comments, whatever. I like your support. Thank you. Bye.
But classical, practical and factual. Harmonic, ionic, bionic, atomic. practical.